Welcome to Views from the Top, the Arma podcast. I'm John Meehan, partner and head of fintech at Arma, and I'm delighted today to be joined by Tim Hardcastle, CEO and founder of Instanda, a fast-growing, innovative InsurTech software business. In this episode, we will cover how digital infrastructure players such as Instanda are enabling the insurance industry to evolve from slow-moving legacy technology platforms to modular and agile offerings, and why this transformation is getting so much attention from the investor community. Tim, thank you for joining us today. Perhaps you could start by giving us a brief introduction to yourself.
Well, thank you, John. Thank you to Arma. It's great to be here, and you've put us in a wonderful spot. I've got tremendous views, so hope I don't look too distracted during the session today. Well, Instanda started, like many founder stories, through a convergence of several threads, really. I mean, I was a CIO in different industries where I saw and was managing responsible for running very big applications, some of the most famous company names you can name today. So that was great experience. I had a lot of scars on my back as a result, but you could see the value, but you could also see the challenges. And then I got headhunted by a very charismatic guy, Heidrick & Struggles, into Hiscox, and I was fortunate then to be working with Bronick Maciada there and the team. And so I was jettisoned into insurance, and it was an unfamiliar industry at the time, but it was fascinating. I loved it. The people there were fantastic, but some of the patterns that I'd seen emerging during my time as CIO in other industries re-emerged. This frustration with being able to run your business in a way that was pretty simple to talk about, but very difficult to see translating into something really powerful and streamlined and efficient. And Hiscox just was like a big echo chamber of all the things I'd seen previously. And that was the start of the epiphany I had around what the technology needed to do. And that was the beginning of Instanda. And we cemented that because there was a bit of serendipity. I left Hiscox probably a little bit prematurely, but that was the kickstart to doing more research in the industry. And then I found many other companies were in a worse state than Hiscox. So that I thought something had to be done. The industry really needed a better solution than was around. And that was the beginning of Instanda. It was very much the culmination of a number of threads, as I said.
And if you look at the insurance industry, it's characterized by inertia, old technology platforms that companies are fearful of changing, long sales cycles. How have you seen that evolve over the years? And particularly when you started off in Instanda, what made you think that you were going to be able to change some of those dynamics in the industry?
Well, that's a great question. I think the insurance industry it's a very large industry, right? Several $1 trillion globally. And in most of the states in which countries it operates, it's heavily regulated. It has a necessity to ensure it's treating customers fairly in different forms of legal constructs. And the industry is a very old industry. It goes back thousands of years. I mean, we probably think of it more recently in terms of where it started in Lloyd's of London several hundred years ago. So the industry is really well established. It's made investments in technology, but as you say, some of those investments have been made decades ago. And with a heavily regulated, compliant, heavy construct around how you serve the customers, naturally, business processes and technology are quite, let's call it stable, but ultimately they can shift into being fixed and rigid. And particularly when you've made investment in technology that's, say, 20, 30 years old, as you all know, John, technology that was built 20, 30 years ago, probably in some instances didn't even conceive of online servicing, right?
Yeah.
So you do have, as you say, on this one side, the industry is a little bit lethargic, and that's a reflection of some of these historical investments. So looking against this wall, if you like, of how would we climb this wall with a new technology. And I think, again, like many founders, I think we just had with my co-founder, we had such a burning passion and belief that new technology that was flexible, putting in the hands of the business users, was bound to be taken up by the industry because it was such a positive change on where they were. And we'll probably get into the realities of what that looked like in terms of getting traction, because it's not as simple as that. But we were absolutely had a burning passion that this was the right thing to do.
And if you look at the industry landscape, you've got some larger players such as Guidewire, Duck Creek that have been around now for decades, very service intensive type solutions. You've then got other players that are very well capitalized, that are really trying to run hard and to drive growth at any cost. How has Instanda been able to compete with those players, and what is your right to win?
I think, well, if you look at the industry at a macro level, and let's say we focus more on the P&C side, then where historical investment, just going back to what we were talking about earlier, has been placed, is a lot of the technology investment has been made in personal lines. And that includes, over the last 10, 20 years, modernization programs, as you would call it, where you can't argue with the success of companies like Guidewire, for example. They've done a good job of going into those spaces, being adopted and implemented, and they're pretty dominant, certainly in the US, and they have some international presence as well. And so when we looked at the marketplace, we had this passion that we could see that the new technology was relevant and going to be compelling for the insurers. But we recognize there's a big, if you like, call it technical debt. There's an investment that's been made in these platforms that no insurer is going to suddenly swap out something like a Guidewire for a little startup, good as we were.
Yeah.
So our focus naturally was saying, well, what parts of the insurance value chain and segment are really experiencing a lot of pain and friction, but there's a better pathway forward for us, and that turned out to be commercial lines insurance with the MGAs and with the divisions of the insurers. And why does that suit us better? It's because the commercial lines part of the P&C market, the book sizes tend to be smaller. They haven't been given the same attention in terms of technology investments, so it's a mixture of some older technologies plus some manual stuff. Excel spreadsheets seem to be a feature, and yet it's also got attractions in terms of low combined ratios, so therefore high margins. And it's also a great area of many companies are looking at it for growth. And so you put all that together, then having an agile technology like ours really plays in heavily to allowing insurers and MGAs to make the most of that part of the market and to get to market faster, to run their businesses on a lower cost footprint. And that's why we're winning and we're growing so fast, because that's the segment we're in. So in conclusion, we're not competing with the bigger players in the personal line space, but certainly we believe we are one of the world's best in terms of commercial lines platforms. Yeah.
And as you just mentioned, you're growing fast. You've got great KPIs. You've got great customer retention. ROI of customers is extremely high. How do you achieve that in an industry where it is known to be slow moving, long sales cycles, etc.?
Well, I think trying to take that point in a few parts, the sales cycles generally, certainly with the bigger insurers, as we've been winning engagements and projects with the bigger insurers over the last 2 or 3 years, those sales cycles do take time. People naturally do have to follow their internal corporate governance. They'll go through procurement processes, and we wouldn't want them to try and shortcut that, because those processes in general allow them to be discerning and to make the right choice, and they can look at the competition. I think, I'm still saddened by the fact a number of our competitors will misrepresent, and maybe we'll touch on that later, because we've often been brought back into companies where they've been missold to. But anyway, put that to one side. So I think those sales cycles won't change. I don't expect them to change. It's part of the industry. I think the MGA side of the market are a little bit quicker. They have slightly more entrepreneurial aspect to the way they do business. So they still run the processes, but they're probably faster. So that's one side of it. I think the industry has been waiting for some better technology, but you then also stumble into this next, let's call it a glass ceiling or next challenge, which is sales cycles are one thing, but if I asked you the question, who could you trust? And when you answer that question, you go into, well, I'll look for certain attributes. That's like track record.
Mm-hmm. Yeah.
That's like balance sheet strength. That's like how long have you been going for? There's a number of dimensions around longevity, because let's not forget, we're going into the core of these businesses, whether it's an MGA or whether it's the division of a larger insurer, a commercial lines division. We're still at the core. So sales cycles are long, but the trust about who you can rely on. And I think the third component about why we win is simple, actually, which is that it's the way that we design the technology in the first place. So I've previously said it. No one asked for the technology that we designed and delivered, which was, if you think about any kind of insurance, but particularly, again, commercial lines, it's complicated, but inexorably, all markets inevitably are going to become more retail-like. What do I mean by that? That's where you're relying on data and insights, analytics. You're wanting to be changing your product, your pricing, and doing that in ever-increasing velocity. Well, what does that mean when you put a system against that, right?
Yeah.
Certainly a system that was designed 20, 30 years ago, the rigidity that we talked about earlier then becomes very painful because you can't make change quickly and cost effectively. And that's why we win, because Instanda was designed from the outset to be something that basically meant that your cost of change was marginal cost only. And we did that by separating the code away from the change in the platform. And that's the heart of why we are so successful. And then, of course, you give ultimate control to the insurance company. They don't have to wait on a supplier or a partner to make that change. So that double whammy of the cost of change and the control over it is why we win so much, notwithstanding the sales cycles and notwithstanding the glass ceiling. So we've been on a bit of a journey to get the success we've had, but I have no doubts it will continue.
And you mentioned a few times trust, which is key in any industry, but particularly in the insurance industry, just given the fact that there's not a product that's being supplied, it's much more of a service.
Yeah.
In one of your recent interviews, you, I think if I quote you, you said that when hype fades, the real work starts. If you look at the InsurTech industry, particularly 2 years ago or 3 years ago, there was a huge amount of hype, and there was a lot of capital that was invested in the industry. Some of that has resulted in failed experiments, and to a certain extent, I think we would argue maybe a loss of trust in some of these vendors. How do you see the industry, and how does Instanda particularly benefit from the cycle that we're in at the moment?
Well, I think if we took a macro view on cycles of technology change and startups, it doesn't matter whether it's insurance, pharmaceuticals, retail, construction. You look at any industry, there are waves, the patterns that are predictable, if you like, which is that startups originate with great ideas. Investors find them attractive because they're maybe offering a different proposition, and not all of them succeed. I mean, that's the general way of these things. There has to be attrition because there is this Darwinism effect of some succeed and some don't. And so I don't think insurance, particularly the InsurTech wave, has been any different in that respect. However, I do think if you zoom in a little bit closer into insurance, I would categorize the InsurTech wave in bifurcated. I think most people would say it started in 2015 as a sort of a movement, but it's certainly bifurcated. And to your point, on did the investors back the right horse or not? So one arm of the bifurcation was companies started up saying, I think insurance is broken, and we can do insurance better than the insurance companies. And there were a number of companies that set off down that path, and it's a relatively compelling superficial argument, because insurance, as we were talking about earlier, is a little bit slow. There are reasons for that. And so one might say there's an argument that a new startup offering the same proposition could do it much better, more modern technology and so on. And I think arguably most of the investor community would look at that arm of the leg and say that actually hasn't succeeded. At best, it's been modest returns. And many of those companies have not succeeded anywhere near as much as the hype. You then have the other leg, which is where we went down, which is saying the insurance players do know their industry. They may need help, and there's things that they could do better. So let's call it the enabler leg. And that's where we went down. We felt that there was lots of opportunity for insurance companies to do their job faster, lower cost, and to be more like a retailer. And that's a leg we went down. Now, you then so you got those two different legs that people went down. I think the try and do insurance better hasn't been successful. The enablers, again, has had some attrition. And I think that's also then been exacerbated by some of the outlook of the founders and maybe the market, the investor marketplace, where it was try and get revenue at all costs. And that model ultimately doesn't reflect business reality. And so I think it was appropriate and timely that in 2022, I think it was Q1, somewhere around there was a reset and the InsurTech valuations collapsed. Was a reset. I think investors suddenly, well, whether it was sudden or not, you'll know better than I will. I'm not so tuned into that part of the market, but it was a realization that to be successful, you needed companies that were going to make money. It sounds a bit bizarre to say it, but that's the reality. And so I think that also reset valuations. I think capital raising thereafter was much more level-headed. Rule of 40 became a much bigger sort of thread in the discussions, and being profitable and cash generation, as you say, we're profitable, and that's where we always intended to be, is part of then the attractionness. But I think taking a step back, I think net, I'm a firm believer that InsurTech has been accretive in value, but I'm not sitting in the investor chair. I don't know how the investors would look at the market. I think for the insurance industry, InsurTech has been value accretive because it has delivered improvements in ROI, as you mentioned. We do that for all of our clients. If you look at the actual amounts of investment that's gone in relative to the returns, I'd have to defer to you to give that opinion.
And as you mentioned, obviously, technology investment is one of the core areas, and it wouldn't be, I think, a podcast if we didn't mention AI at what's going on in the industry. As you look at the insurance industry, how do you think they're embracing AI, and what do you think the impact of AI will be on the insurance companies?
Well, I think there's a few perspectives that's worth exploring here. So maybe starting at the practical level, rather than we get too carried away. At the practical level, I think we've seen different waves of technology come through. I'm a seasoned, I think, technologist, so I've seen different waves over my few decades of being in business, and I don't see at the practical level that any company should be approaching the opportunities that AI provide any differently to when we're looking at .com, or when we're looking at business process reengineering, or when we were looking at moving from on-premise to cloud and so on. I think it's essentially a change management exercise, and that sounds a little bit flippant. It's not meant to be, but it has the same attributes. So, for example, there are some really simple things that companies should be doing. And some of those are to accelerate and leverage the opportunities, and some of those are to be putting the brakes on. So if we talk about the brakes for a minute, every company's got to think about the IP that it owns. That could be on, for example, pricing and the way that they look at the pricing of complex products, and where's that going to sit, and who's going to own it, and how's that going to be orchestrated and managed. You also have to look at things like security. So I think only 2 weeks ago, there was a first publicized global security breach of Claude, which is Anthropic's product. And that was essentially leveraging an AI agent against itself, because they're just, by design, they're naturally helpful, but it's not so helpful when you give them the task of breaching the security inside the organizations that they're operating in. So that's a good example of where companies need to be thinking quite hard around securing the AI capabilities that you're using. And I think my sentiment is it's very difficult to secure a model, but it's much easier and more pragmatic to secure the perimeter. So that's another dimension. And the other one is, of course, the EU AI Act has here in Europe. It's insisting and forcing us to be transparent and making sure there's audit and so on about decisions that are made. So there's some things that need to be looked at from putting the brakes on, just checking the progress. And conversely, there are some accelerators. And I know this sounds a little bit, again, banal, but what Microsoft is doing with Copilot, I don't know whether you've done this, but if you say, what can I automate about my role today? There's a whole host of things that could be done, even at just the really simplistic level. And everyone in every organization should be encouraged to start to think about their jobs at that little small micro level in a different way using the tools that are around. And then there are obviously change initiatives that every organization should be pursuing. But my experience and advice would be, don't try and get too greedy. Just do a number and give them the support. And I think the only other element to consider is set up probably a small innovation team that is probably being a little bit more adventurous in terms of exploring the art of the possible. So the business change in the smaller projects should be given to the business leaders, the divisions, and getting them to implement some improvements, whether that's on pricing or data submission, classic areas for AI enablement, and then the innovations to get a little bit more adventurous. So for an insurance company, I think time's great. You can move things forward, but at the same time, you have to be cautious. For us as a software company, we're leveraging AI across our technology. Of course we are, and we're heavily engaged with conversations with our clients around where value can be generated. And then in the same way, all of our employees are encouraged to be using it in every day of their work. And so we're no different, I don't think, in that respect. I think perhaps we have the benefit of being a little bit smaller and ambitious, and so we're able to make changes faster.
And maybe a difficult question, if you look out 3 to 4 years from today, how important do you think AI will be for Instanda in particular?
Well, I think at the industry level, I'm excited, but also a bit perturbed. I mean, if we stay at sort of macro for a minute, Nvidia market cap at the moment is 4.4 trillion. I still struggle to understand how that can be at that level. I think even indeed, isn't it just 2 weeks ago that Nvidia's H100 GPUs, and they're now in orbit on a satellite, and they're looking at the benefits of the cooler atmosphere and the benefits of solar power to run the chips. Because why are they doing that? Because the cost of compute on Earth is exponentially rising. I think there's a prediction that somewhere between 9 and 10% of the entire US energy consumption will be on data centers powering the AI demands. And so my perturbed bit is I don't see how the economics of that level of compute power to generate the models is sustainable. And I'm not sure whether there needs to be a price adjustment. Certainly investors are talking about that now, certainly in terms of the way that the models are being consumed and priced. But I'm equally excited because the advances that are being made at the macro level in terms, we hear about new models every week, literally. Agentic AI, there's a lot of discussion around that. So I think from an industry standpoint, if it's possible to lean into the benefits, then every company should. And we're no different. So we're flexing across models that are available as well as building our own. And I think, again, it's back to what I said earlier on the practicalities. I think you have to take one step at a time, and you can be consumed with the possibilities of the what ifs, but I don't have a crystal ball. What I do know is we as a company are tremendously excited about the possibilities, because the way that we're architected as a true SaaS platform, I believe, I'm sure your audience will tell me if I'm wrong, we are the only company that is serving our client community globally, and our client community is on the same code base. It's not radical, but it is radical for insurance. And what does that mean for us? It means we can be updating as we do every few weeks with new features. We've already embedded AI into our platform already. We'll continue to do that. So I think from an architectural standpoint, our technology is perfectly placed for AI enablement and embedding AI, and we'll continue down that path. So I'm really excited about the future. But equally, as I said, there are some reservations I have around the cost of it in the medium term.
But it certainly feels like, as you said, if you look at the insurance industry, where AI is very topical at the moment and is likely going to have quite a significant impact in how insurance will be delivered and how customers will be served, etc., that a company like yours, which is innovative, which is able to a certain extent move with the times and invest, that AI is definitely an opportunity for you over the coming years. Obviously, it's hard to predict how big that opportunity will be and what that opportunity is, but you're ideally placed to take advantage to that opportunity.
I believe so, but it again, for us, it's not a big step to as we were discussing earlier, to leverage the capabilities of AI. It's no different to how we actually designed Instanda 10 years ago or more, which is that we recognized there was pain points in the industry. We spoke to a lot of people in the industry, and then we added our own innovative thinking and design philosophy to create this, although I'm going to say it myself, this wonderful platform that puts the power in the hands of the insurance community. And I think it's no different now than it was then. I think we created the platform so it could be part of an ecosystem, and so it could be changed rapidly, both at the code level and at the configuration level, where companies are working every day with different products. So I think we are perfectly placed to take full advantage of it. But we'll continue to do what we've done, which is talk to our clients and our prospects, get their ideas, add our own innovation, and stay consistent with our design thinking and philosophy, which always continues to put the technology back in the hands of the user community.
And if we look out over the next few years, one of the questions we get asked a lot about is that whilst on the one hand the insurance industry is full of legacy, quite difficult to move technology. It's a bit like open heart surgery that you see that some of these carriers need to do if they want to do a replacement of their existing tech platform. At the same time, to paraphrase, nobody gets shot for using IBM. And so there's a certain amount of nervousness, particularly at the CTO levels and the CIO levels within these carriers to do anything radical to their existing IT infrastructure. How do you see the market evolving? Do you think that there will be that big movement to replace some of these core systems that exist within the insurance world? Do you think it's going to be much more hybrid in some of the legacy systems sitting alongside some of the more innovative systems like yours?
I think that's a really big question to pose, and the industry is asking itself that. I think, again, I'll probably look at that in several parts. So there's some great advances that are being made in how technology is classically being changed. So as an example, we have a tool, you go and talk to all the major SIs, they'll have tools now for data migration, which are far more effective, faster and cheaper and a higher quality than anything that existed just literally a few years ago, right? And that usually, when you're looking at any big system transformation, data migration is one of the big pain points, right? And yet here we are, we can use some of it AI-enabled tools that allowed that data migration to happen far much more effectively and cost-effectively. So there are advances in technology which are going to present insurers with opportunities to look at that legacy investment and to say, actually, we can think of it differently in terms of replacing it. There are then, again, orchestration capabilities coming out with AI Agent. That means you can start to think about your core platform as being dumbed down and ultimately becoming a very simplistic system of record, and then your orchestration can sit on top with AI agents. So there's a lot of advances in that world. But you're right, ultimately, insurance companies, as we touched on earlier, they work in environments which are not without regulation and compliance, and customer data and is critical for them to ensure that they're treating their customers fairly. And so they have to be cautious with the changes they make. And so I think my view is that on personal lines, as I said earlier, some of the big technology incumbents, that's where they've had their most success to date. I think we'll see a slower rate of change in personal lines. That's not to say that that momentum will not increase. That's my view. But I don't think there will be radical change in the next 3 to 5 years. And in the period 5 to 10 years, I do see an increasing rate of change in that space. But for all the reasons we talked about earlier, I think personal lines will be a little bit slower. On commercial lines, I think it's already happening. We're part of it. We're now working with some tier one insurers, and they have gone through their elongated procurement processes. They've looked at all the other options on the table, some of them the bigger players, and they're leveraging some of these tools that I said, the data migration opportunities and others, and they're looking at how do I combine the best set of technologies available to give me that agility and to operate like a retailer. And so I just see more and more and more rapid change, certainly in the commercial line space. We haven't touched on life and health. Mm-hmm. We can just do a slight sidebar note. That's going to be even slower than personal lines because we have several prospects that are still talking to us about running on mainframes, and they're worried about the fact they don't have as many COBOL programmers as they used to. So it's, again, slightly dug in further. But I think certainly in the 5 to 10 year horizon, we'll see life and health migrating at the same increasing velocity as we will with personal lines. For now, for us, our focus, and I think where the industry is most exciting, is on the commercial line space. And I see that just being a really great opportunity for insurance companies to do better. And we're hopefully going to be part as much as that as we can be.
If you look at a lot of European headquartered software companies, and particularly insurance software companies, they've shied away from the North American market or found it very, very difficult to get much traction in that market. How do you look at North America, and what's your strategy in that market?
I think North America is, when we look at it from afar, it by comparison, it's 10x the market size of the UK. Many again. Perhaps slightly naive people would look at it and say, what a great opportunity. But the North American market it's a huge market, but it's very complex for different reasons. So as you know, it's got two types of insurance, the admitted lines and the non-admitted lines. Non-admitted is, I guess in common parlance, we might say that commercial lines. And the admitted lines business is more complicated. It has a particular set of attributes. It needs an awful lot of business process servicing to it. And we've concluded that, some of the real strengths of Instanda, this being able to operate like a retailer, changing your pricing, changing your question, doesn't speak well in an admitted line space, because price changes and coverages and these things are set by the state, and you go at the pace of the states telling you when you can make these changes. And so with all due respect to the companies that have bedded themselves in there, Guidewire is one, they're doing a good job, and long may it continue for them. I think that's in of itself a very special market, and I think there needs to be structural change at the market level before you could start to look at technology advantage. In the non-admitted lines, again, we're making great headway there. I think there's lots of opportunities for us. We've been in the US probably 6, maybe 7 years, so we're well experienced, and we see great potential for that part of the market. There are some players as well that are looking at combining admitted and non-admitted. That's another hybrid kind of offering. And that again is also opening up some interesting possibilities. So we'll see how that develops over the next few years.
And what do you see over the next few years? What are some of the real opportunities that you see that can enable you to continue to grow how you've grown historically very successfully, and potentially even accelerate that growth going forward?
Yeah. I think, we're really clear on the markets we're focused on, which is UK, US, and Australia. And we're really clear that our ambition in those markets is to be the market leader for commercial lines. And we think we'll achieve that in each of those markets. The time horizon will change. I mean, obviously, the US is going to take us longer than, say, Australia, just by virtue of size. But I think we've looked at what our clients love about us. We look at where they're saying to us there's a few things that we need to be doing in addition to what we currently offer, and we can either build that out, or we're capable of partnering with a couple of companies to deliver those things that the clients are asking for. So I think we're feeling pretty good about having most of what the industry needs. We're never satisfied. I'm never satisfied. There's always things we can do. But I think we've got the fundamentals of success. And we've proven that over the last few years with the growth rates, as you mentioned. And so we're feeling pretty positive about the next 3 to 5 years. I'm never going to be happy because that's just the way I am, I guess. but I think, ultimately, we're very focused on, as I said, the particular segment and those markets. And I don't see that there's anything fundamentally missing from being a very value-adding, attractive offer to those segments. So I think our only issue is just having enough great people to be able to go and have the range of conversations that we need to. And we're always on the lookout for great people. So anyone out there that wants to come and talk to a growing software company, we'd love to hear from you, because we just need more great people in our business.
Well, great. Well, Tim, thank you very much for your time today. It's been fascinating to really hear your perspectives on how the InsurTech industry has evolved and will evolve over the next few years, both from a technology perspective, but also from an end user perspective. And particularly impressive how Instanda has been able to really be an innovative provider into that market and not only be successful here in the UK, but also importantly in the North American market. So thank you again. It's been a pleasure speaking with you.
A pleasure, likewise. Thank you for having me, John.
And thank you, everybody, for joining us today. It's John Meehan, and been joined today by Tim Hardcastle. Hope you enjoyed the podcast, and we look forward to the next one.